There are a number of risks in trading, and I have covered quite a few of those recently on my website, thebuddhisttrader.com. I want to talk today in particular about the risk you are taking on from your broker. And of course, this has been highlighted recently when the Swiss National Bank unpegged the Swissy from the euro, which saw FXCM in trouble and Alpari going bust, and sort of one or two other online brokers still being sort of on very, very shaky ground. So never ceases to amaze me that we seem to think for some reason that we should just have one trading account. I mean, I know why that is, because basically, laziness makes us think, well, we know the platform, and learning to use a different trading platform is cumbersome. Keeping up with the different brokers trading different accounts is cumbersome. But frankly, this is actually very false feeling of comfort. So now let's just look at a few things you want to consider when looking for a new broker. Now, one obvious thing to me, and I can only share with you what is important to me at the end of the day. You need to make up your own mind, of course, what works for you. Now, I feel customer service is of the utmost importance. I mean, you do not want to find yourself in a situation when you have technical difficulties, that you're waiting online for hours to speak to the right guy to help you. Ideally, if you need to get out of a position quickly, you want to be assured that your broker will receive your call and exit a position for you if a need be. In today's volatile markets, these are quite important considerations. Now, the other one which is important is the capitalization of your broker. Clearly, you want to ensure that your broker has enough capital behind him and that he doesn't totally rely on having to take the other side of your trades. While I know it's a common practice with many brokers, who are doing this, particularly with new accounts, and in and of itself, the practice is not wrong. It becomes wrong, though, when that is the only means by which your broker can make their money. So that is certainly something you might want to look into. Trade execution is another very important aspect. Most promise you very good trade execution, but do they actually really perform that well? It's something you need to check in their demo accounts, see how you feel. It also, of course, depends on the instrument and your trading style, how absolutely vital this is. If you are a longer term trader, it doesn't matter quite as much as if you are in and out of trades in so often seconds, even when you are scalping. So and to that end, of course, the trading platform, it's hugely personal. You need to take a look. Most brokers these days have demo platforms. Have a good look around, see if you like the platform, and then go for it. Go for the one that feels most intuitive to you. The things that do not matter also need mentioning, and this is perhaps much more important, really, to the long-term survival of your account. One thing that does not matter is margin. You shouldn't be maxing out on margin anyway. So whether you can go 1 to 50, 1 to 20, or 1 to 100 even, it really is immaterial. You should really have enough money that you can comfortably trade only using 25% of the margin you are allowed in your account. Anything else, particularly if you're holding positions overnight, is quite frankly lunacy in today's markets. So while yes, margin is nice to have, and you should have it. By the way, check out what I've written about this extensively in my blog on thebuddhisttrader.com. So margin is not that important. It's nice to have. It's not the main consideration. Incentives is another one. There are so many brokers out there now who are offering incentives. At some point or other, you're going to have to pay for that. if a broker offers you £5,000 in your account, that £5,000 has to come from somewhere. Usually you pay for it in commissions or in spreads. Or, good heavens forbid, you pay for it in capitalization, meaning that the money comes out of the capital. So again, I'm coming back to, please, please, please make sure that your brokers are, the ones you're using, are properly capitalized. The other thing that isn't that important unless you are really a very, very short-term trader is using the cheapest spreads. To me, actual trade execution is much more important. Make sure that you do actually get the best execution possible. And that can go a long way towards ensuring your trading profitability over the getting the cheapest spreads. Because if you are, particularly in FX trading, if you are up against a lot of requotes, that can be, sort of quite a cumbersome game, and could cost you in the long run. So in closing, I would like to say, make sure you diversify your capital across several countries. So, for example, if you are in the UK, have an account with a UK broker, one in America, and one in Australia. I favor Australia these days. It is somewhat divorced from sort of all the other troubles that are going on in the world. I'm not saying it's immune. Nothing is immune in this day and age, but I do like Australia. Life is still somewhat different over there. And if you're in America, also have an account in Australia and open an account in the UK. I like the UK because, not only because I'm English, but because, yes, we still have the pound. We are not quite as deeply immersed in the European mess as Europe is. So, really, it's a little bit of common sense. You can actually go to my website under the recommended broker section. I have actually put a link at the bottom of this video, which leads you directly to the recommended broker section, where you find there is one for the Aussie broker I prefer, and there are also in that section a few useful articles you might like to read on CFD versus spread betting, and using margins. Very, very, very topical, because good trading is all about understanding risk. So thank you for watching this video. Please go to thebuddhisttrader.com and check out more on all things of trading and investment psychology and much, much more. Thank you.